Is joining us now, Scott Lincicome, Vice President of General Economics at the Cato Institute. Scott, thanks for joining us this morning.
Thanks for having me.
So, I'm not going to deal with what President Trump said, but there is a general view, Scott, that tariffs have not been as bad as expected, either in inflation or in growth terms. What's your response to that?
Yeah, I think there's two things. First, there has been some surprises related to the tariffs, mainly related to the lack of governments retaliating. Last time Trump imposed a bunch of tariffs, a handful of different governments retaliated. This time, it's less. There's China, there's Canada, and the rest. So that's been a bit surprising. The other surprise maybe is that importing companies that are paying the tariffs aren't passing these on to consumers as much, so there's been less pass-through. But overall, the tariffs are doing pretty much what we expected. They are increasing prices in the United States, whether at the company level or at the retail level. They do appear to be a drag on American manufacturing. Manufacturers are reporting constantly they're having issues with raw materials pricing and with uncertainty, and that they are a bit of a drag on growth. But look, the U.S. economy is massive and services mainly, and not that trade integrated. So the idea that the tariffs alone were going to cause a recession or cause inflation to go nuts was really never in the cards, and no serious economists were saying that.
Let's get to the particular contribution in this really terrific article that you wrote, Scott, which doesn't look at the macro impact per se, or doesn't look at what particular tariffs are there, but looks at the complexity of just trying to comply. It is I don't know how else to say it, a disaster. And walk me through what you found when you looked at, if you're just a regular business trying to do something, what it takes to figure out what the actual tariff is on the product.
Yeah, it is incredible when you talk to anybody who's actually doing this, is in the biz for logistics and tariff compliance. And if they have any hair left, they're ripping it out still, because if you compare the U.S. tariff regime today to what we had just a few years ago, it is a night and day difference in terms of compliance. The number of tariff regimes has gone from,
we've got a graphic up now, Scott.
Yeah.
I don't know if you can see it, but there's 17 different tariff regimes there compared to say 3 in 2017.
Exactly. And the revisions of the tariff code this year are now into the 50s compared to about 3 or 4 back in 2017. But the other big thing is how these tariffs all interact with each other, because the administration has imposed a bunch of carve-outs. They have these trade deals. They have requirements for the aluminum and steel and copper content in the import. So if you're bringing in a washing machine or a can of beer, you need to know its metals content. Certain tariffs do apply on top of them, of tariffs, others don't. So trying to figure this out, trying to map this all out is something we took on at Cato over the fall. And I can tell you it's almost comical when you look at the difference, again, from a very simple 3-step regime back in 2017 to this labyrinth, this maze that doesn't even capture all the complexity, is more than a dozen steps. And other thing that's important, it's always changing. We posted our original analysis in late November. We're going to have to redo it in the new year because it's already changed again.
Well, Justin,